Hi, everyone. Welcome to today's webinar, Future of Real Estate Investing. I have my colleague Matthew on the webinar as well.
Hi, everyone. Nice to meet you. And feel free to use the chat during the presentation. We will monitor it and answer your question at the end.
Okay, so we're just going to say thank you so much for joining us today. We appreciate you taking time to, to be on this webinar with us. We're going to start with a quick introduction of ourselves. I work at Consensus. I lead client engagements, particularly in the real estate sector and also in fintech. And my role is really to help clients understand the solutions that we have out there in terms of enterprise Ethereum, enterprise blockchain solutions, and also to help them adopt the right tools when they're looking at migrating to digital assets and to digital assets infrastructure. In terms of my background, I've got a 16 years experience in the tech industry. I'm a tech aficionado. I love to follow trends in innovation, working in digital transformation and innovative products. And that's how it's led me to blockchain, because I think for sure blockchain is one of the most disruptive technologies we have in the next couple of years in the tech sector, and it's disruption for good, actually. In terms of my work in the real estate sector, particularly at Consensus, I've helped to deliver one of the projects that we did this year with the UK Land Registry. Matthew?
And I'm Mathieu. As you will probably hear, I'm based in France. I'm a digital asset lead at Consensus. So I focus mainly in France and continental Europe. And as part of my role at Consensus, I led an engagement to tokenize real estate fund. So we will talk a bit about that. And prior to joining Consensus, I was an architect. So I'm into real estate. It's a long time. I graduated in Paris and then worked in Beijing and London. And before joining Consensus to try to see how blockchain could help in the real estate sector. So I hope we'll give you a great insight on these two topics today.
Fantastic. So this is just an overview of our audience segment. It doesn't mean that if you're in the call today and you don't fall into any of these categories, so to speak, that this is not for you. We just want to help to set the scene, because as we go along the presentation, our presentation will be majorly focused on these segments. In terms of the presentation overview, we'll start with a high-level introduction of Consensus and real estate, why blockchain for real estate. And we think it will be best if we just walk you through the value proposition across the value chain of why blockchain is actually useful with concise certain use cases. Well, most importantly, towards the end, Matthew would talk more about the project which he mentioned with Matter Capital, so that you can have like a real life example of projects that we're working on and things that are happening within the sector. So about Consensus, for those of you who may not know, brief background, Consensus was started in 2014 by Joseph Lubin. Joseph is the co-founder of the Ethereum blockchain. The Ethereum blockchain is the second largest blockchain globally after the Bitcoin blockchain. And really, since we started 5 years ago, our teams have grown to about 1,000 members globally. And in terms of the work we have done, we're present in 30 plus countries. We've worked with high profile enterprise clients, government clients, and anything from a strategy to financial services to asset tokenization, supply chain and identity. These are like the major projects we have delivered. But there's so much more, right? So this is just like a snapshot of our competencies and some of the things that we have done. So what is blockchain? The blockchain is, in a nutshell, is really a programmable, secure, distributed network. It's a decentralized data record. By decentralized, we just mean that no one person particularly manages, or no one entity particularly manages the record of transactions. And so if, as an example, Matthew and myself, and probably those of us on this call today, decided to form a blockchain network, each of us will have access to that network. Each of us will be equal participants and equal owners of the network. And so that is quite important, because what that means is that it helps to reduce fraud. It helps to reduce tampering within the network. It becomes a trustless network, which means that you don't have to rely on any one particular party to validate or to act as a single source of truth for whatever data is being shared. The other two other main things just to point out is, like we said, is immutable. And so once you've actually you've recorded a transaction on the blockchain, it's quite hard, almost impossible actually, for you to go back and delete or to tamper with that data. And then the final thing is, it's a very secure network. It uses the highest levels of cryptography to ward against cybersecurity. And the is really smart contracts. And smart contracts is just a way of saying that you could encode contracts on the blockchain and make those contracts kind of like self-execute themselves, which helps to automate processes as an example. And we'll give some particular instances how this can be used. So why are we doing this webinar today, and why is this important? We think this is a timely topic, right? So over the past 10 years, as blockchain was introduced through Bitcoin, a lot of evolution and has happened in industry since then. But what we're particularly seeing over the last year or so is that, large financial institutions, the likes of JP Morgan, the likes of the World Bank, are actually beginning to take seriously the notion of tokenization and the notion of digitizing assets. So whether this be real estate assets or debts or bonds or whatever else, these things are happening now. And on the other hand, you also have startups or medium-sized companies, small to medium-sized companies that are taking an interest in this and looking at how they can leverage this technology to begin to bring innovation into the ecosystem. And so lots is happening in the real estate sector. And think about blockchain, like I said, when I mentioned that blockchain primarily is really transformational in terms of technologies, the fact that blockchain really fundamentally helps to connect an ecosystem. Today, when you're talking about businesses are all talking about ecosystem, how they can collaborate more and how they can participate more. Well, blockchain is a technology to make that happen. And when you look at the real estate value chain in particular, right from land titles through to construction, through to real estate financing, investment, property management, you can almost begin to think and vision, ideal, kind of like, the ideal vision would be to have like a real estate blockchain enabled network, which will allow these ecosystem and participants to begin to collaborate efficiently, have clear understanding of where the processes are at every point in time of a project, and just really help to make the sector much more efficient. So we're going to, I just also failed to say that going back to this slide, what we're going to be doing is we're going to be using this slide to kind of like tell our narrative as we go through the webinar. So titles and urban planning. In the UK, the land registry has been looking at blockchain. And the reason why they've been doing this is for the past 2 to 3 years, they've been looking at, they've been doing a major digital transformation program, and they've been digitizing their data records to make it much more easier to engage prop tech companies, as an example, or even real estate providers with data that they need to carry out much more efficiently their services to the wider market. And some of the challenges that other governments in developing countries, as an example, have uncovered is the fact that maintaining digital records is a nightmare. Some of them just don't have them. And when you actually have them, people begin to tamper with them. There's loss, there's fraud, there's just all sorts going on. And ultimately what happens is that you have a lot of land that is being wasted because you have disputes. And really the promise of blockchain is how can you apply blockchain, or the promise of any kind of technology, or the vision is like, how can you really help to unlock the land to make it, to bring about economic and social development within these communities. And so when you talk about a blockchain-based land registry, going back to the project that I cited last year that was conducted in the UK, one of the key things, efficiencies that we realized through that project, was by actually digitizing the land titles as an example and making that whole process available, putting the entire conveyancing process on the blockchain, you could significantly reduce the end-to-end transaction process in the buy to sell from 28 days as an estimate, right, in a very efficient system, which right now, to as little as 10 minutes. So that's one of the main attractions, that you can actually begin to have digital land titles that could make the conveyancing process much more efficient. And the other thing is, like we mentioned, the fact that you can have a trusted record that is not subject to any one party's manipulation is a major attraction.
And now that we have
talk about planning.
Yeah, and so now that we have a very robust land registry, we can start building buildings. And so to start, we need to pass the planning process. And so here I wanted to talk to you about what blockchain could bring in the planning process, and mostly how we could try to incentivize a bit more people to participate in the planning decisions. So if we look at what's happening today, I think very few people are actually participating in those planning decisions, probably because they think that they don't have, no one will hear their voice, and that expensive developments happen without without them sharing their view, but also because the vocal minority is dominating the planning process. By the vocal minority, I mean the people who have time to attend a meeting on Wednesday night to talk about the new building that will be built in their neighborhood. And the question we wanted to ask is that how can we find a way to incentivize the silent majority to participate and better shape our built environment. And when we took that question, we thought about that of course technology could help enabling an easier access to this conversation. So nothing about blockchain here. We could have visually engaging tools. We could help people understand in a gamified way the trade-offs of the planning system. We can engage communities in different languages because on the web page people can see content translated. But this is helping on the user experience side, but there is probably a lack of incentives. And what blockchain is really bringing here is the possibility at a very low cost to create what we call token-based incentives, to issue tokens that could enable the community to benefit from something when the buildings are built. So if I take an example, I'm participating in a planning decision, in a planning meeting for a big tower that will be built in my neighborhood. The real estate developer is here. He actually wants to hear what I have to say, and to do that, because he wants to have the planning, he will give me a token that I could be able to use when the building is done to access certain amenities at a discount, or even more to own a very small fraction of the building that will be built. So we think that blockchain can act as a very infrastructural layer to incentivize community to participate in those planning decisions. But blockchain will be just a component of what a larger platform could look like. So now that we have the planning, we can start the construction.
Yeah. So in the construction industry, right? So there are a few questions. Someone asked if they're going to, Matthew has responded, but just in case you didn't see it, if we're going to be providing the slides afterwards, or you need to take screen grabs, we will provide the slides, so no need for you to do screen grabs for that one. Okay. So in construct, and the other thing is we'll be doing Q&As, please. We're marking the questions out, so we'll take questions at the end of the presentation. In the construction industry, there are a number of things that actually affect productivity. One is a lack of labor, or skilled labor, so to speak. But the other few things that actually can be potentially managed through technology is the complexity of projects, and how to manage such complex projects end to end in a very efficient way that provides a clear status management, so to speak, for all the key stakeholders within the project. Another thing, of course, is really fractured subcontracting and procurement processes, which makes it hard for you to manage subcontractors, or even to make payments for deliverables as the project progresses from one stage to the next. And so when you think about that, then when you apply blockchain, one of the main things, like we mentioned around smart contracts, is the fact that you can begin to encode agreements in on a smart contract. And so if you can think a situation where you begin to automate contract management, as an example, right? You use smart contracts to automate the agreement, and then based on the actual completion of project milestones, which everyone, you as the developer and and the subcontractor as the provider of that service agrees to. And once that's verified and once that's validated, there's an automatic release of payment to the subcontracting. So we're talking about how can you really help to bring that whole complex project management process in the construction industry onto into a much more digital friendly format where everyone has a clear idea of the project status at every point in time as is relevant to them, and it helps to stop stop creating delays in the delivery processes. And another thing that is quite interesting is, how do you incentivize your subcontractors, as an example, to deliver on time and to deliver the right quality of goods as well. When you think about that, you can almost begin to think about procurement platform on the blockchain, whereby not only are the procurement processes or contracts automated for payments of deliveries, but also where you have like a reputation management system, whereby the good, not the good contractors, but the contractors who are always on time, who always deliver accurately according to specifications, who have like high quality of deliverables, are rewarded and incentivized based on their performance. When you think about that, then, and you've gone through the whole process of the construction, and the next stage obviously will be about how do you begin to finance your project. And if you've got the land titles, you've decided the land titles, the construction permits are in place, and you're thinking about financing. In this regard, we want to specifically address alternative financing, right? And how, because there's a rise in alternative financing right now in the market, and how can you use blockchain as an enabler to help realize that vision? So current scenarios, and this is very true in the Western world, if you have like a large property development, you could either put some of that as equity, or you could get some of this as debt. So this particular scenario, when you see these interest rates, are made out from a piece of work we carried out in the Ghanaian market, to be particular, around the property. And so one of the key things that people faced is the fact that they have very high interest rates when they're borrowing from traditional financial institutions, as an example. And depending on the institution you're borrowing from, interest rates could go to as high as 29%. And so this is obviously very expensive for people to afford or to manage. And then eventually these costs are kind of like passed on to home buyers, and you eventually have a situation whereby houses are too expensive and very few people can really actually afford to buy those houses. And so the other option as well is then, okay, what if we use the crowd financing platform or crowd financing model, whereby the crowd financiers are investors in this property market, and are happy to do that for lower interest rates, so to speak, because they're doing it at 8% yield, as an example, for rent or for dividends. And so what the benefits of doing this, and this happens, like I said, in the Western world as well, the benefits of obviously the peer-to-peer or crowd financing models is the fact that you get a much reduced interest rate. And so it makes your cost of borrowing significantly cheaper. However, one of the pain points as a developer using this kind of using this kind of like platforms is, first of all, you either begin to curate that crowd financing and the crowd investors yourself, which is difficult and time consuming. It's not really your main point of focus as a business. So why would you want to do it in the first place? And the other thing is that, if you decide to use a third party, then there's this lack of transparency, so to speak, depending on, the platforms you use, but majorly you're relying on a third party to act as the people who are like originating these deals for you and managing the deals to your investor. Depending on your appetite risk or your risks to do things quite differently, blockchain can really help to simplify the access to alternative financial models for both the investors and the developers, and bring about like transparency in the process. So exactly the same terms, exactly the same conditions. What you need, what would be applicable in this case is the actual tech platform would be a blockchain registry, whereby all the shareholders, all the crowd financiers, all the investors are actually recorded. So your property is digitized. The shares of the properties are each allocated very transparently to all the investors, all the crowd investors. Everyone knows how much, with their share allocation. And most importantly, as investments, as the property begins to go into the market, as investments, begin to return yields, the investors have the confidence of transparency, whereby they're able to track their return on investment because everything is automated. You're using smart contracts to make those payments and those returns possible. As a property developer, not only have you been able to get a lower cost of borrowing or lower cost of finance, but at the same time, you also have a platform that manages all the overheads of administering that kind of, that kind of investor, that kind of investor base for you. So it becomes much more, and it becomes a much more efficient way for doing this. Okay.
And so now that we have talked about loans, we could probably securitize those loans and mortgages. I think the securitization is a very large industry and very large industry for the real estate sector. And so before going into detail on how blockchain may change the securitization lifecycle, probably a brief high-level review may be helpful. So the current securitization lifecycle can be divided in three main parts. It begins with the origination and underwriting of the loans and its servicing. So this is similar to traditional bank lending. And then an issuer will pull together many loans, that's the part two, to structure the security in an SPV, a bankruptcy remote trust, and start creating the securitization. And then the third part will be the servicing of this securitization portfolio, and where the underwriters will price and bring the securities to the market. The secondary market will happen where investors will continuously review and reassess the securities based on the performance, and broker dealers will make markets among investors trading the security and establishing new prices. And so in those three categories, we see several pain points. For the part one, originators are still doing most of their work on paper. The data is absolutely not centralized, so it's scattered around multiple databases, even for one entity, scattered across a country or a continent. And because regulators are demanding increasingly more data from loan originators, it is becoming very expensive to reconcile this data across all those many databases. For the second part, we have many different parties that are interacting with scattered data and that are creating independent models to interpret the terms of the transaction. We need, and it's like actually one of the largest risks in the securitization industry is the double pledging of assets. So even though it's reducing since 2008, it still demands a tremendous amount of effort to avoid and protect from the double pledging of assets. And again, the regulatory scrutiny adds complexity and cost. For the servicing and trading, so for the issuance or the secondary market, it's the same pain point as in many of the different financial sectors. Settlement takes a lot of time because it needs to reconcile cash position with the security positions, and because everything is done in separate ledgers, we have to reconcile. So settlement takes time, and because it takes time, of course, it takes several weeks from borrowers' payments from borrowers proceeding their payments to investors receiving their dividends. And so even though all those costs may not seem large for individual entities, at the market size and at the global size, this is huge. And we think that blockchain could bring a lot of improvements there. So the common advantages of blockchain, when we talk about loan securitization, we could identify 5 of them. The first one is that we have the possibility to use only one registry. So we have one single version of the truth, where each of the participants of the current securitization industry could interoperate and interact. Because we have one version of the truth, we start to have an immutable and traceable audit trail, because this registry is on the blockchain with the advantages and benefits that Linda described at the beginning. Because we have better access to data dynamically and real time, we can probably better evaluate we can perform better valuation and price discovery, which of course increase the speed with the security that blockchain provides by design. So if we go into detail, if we look at what could resemble the new securitization lifecycle, we could split the process in 6 parts. The first one will be the traditional agreement between the borrower and the lender on the terms of the loans. And as soon as this loan is agreed on, we will issue it on the blockchain and timestamp. It could be a public blockchain, it could be a private blockchain. Those are infrastructure details that we could discuss about at the end of the talk, because I've seen some question about that. And then as soon as the asset is created on the blockchain, we can attach to it all relevant information that we need to understand how the loan is behaving. So the loan payment history, for example, can be continuously added to the loan to support future servicing decisions. So these 2 parts, we are at the loan level, and then we'll start to create this securitization. So the issuers of the securitization will be able to grab all those loans by very granularly seeing their history and transfer them to what we call an SPV smart contract. So another registry that represents actual legal SPV. And that contains specific cash flow models that are coded inside the smart contract. This SPV smart contract will live in interaction with a payment smart contract that will be used to collect and distribute the payments from the borrower to the lender, and then, of course, pay dividends to the security holder. When we have those 2 smart contracts, we can add rating smart contracts that will be used by traditional rating agencies to give ratings on those securitization. Having all the data visible by all the parties will help a lot perform these ratings by the rating agencies. And then the last step is the secondary market. For those who are familiar with blockchain, the secondary market, where both the cash and the security legs lives on the same ledger, enable to do what we call atomic swap or atomic delivery versus payment, which means changing the ownership of a security without any counterparty risk, because we see both the cash and the security position. So that's what it could resemble on the blockchain. And then if we go into asset management, we can talk about the Mata Capital project. So Consensus has created a platform, it's called Codify Assets, that enable any issuers to distribute, to create, issue, and distribute their funds units. And so Mata Capital decided to partner with us to launch their own white label platform for their real estate funds. So Mata Capital is a private equity real estate funds. They manages currently 800 millions of assets, and they want to solve their distribution problem and enable their investor to access secondary liquidity. And they are using the Codify Asset software for that. So the Codify Asset software, it's Consensus software that is part of a larger family of software for the financial industry, so under the same codified name. And this one is specifically designed to enable the issuance of digital securities on the blockchain. So the idea is to provide a click and button interface where any issuers not familiar with the blockchain would be able to use this, benefit from its advantages. And we provide smart contracts that enable an issuer to issue tokens that respect their regulation, where they can control who can access the token, who can exchange it upon KYC AML validation, for example. And we enable them also to, we enable issuers to offer their investor the possibility to exchange over the counter their securities with a very minimal involvement from the issuer, having the logic coded in a smart contract on the blockchain. So if we look at the functional architecture, very simplified here, we see that we have at the lowest level the blockchain network. So there are two different types of blockchain network that we could use. A public Ethereum, the public Ethereum mainnet that everybody knows, that is very robust, but probably less interesting in terms of privacy and speed, even though those challenges are being worked on. Or we could use a private high-performance blockchain network where basically pre-identified and selected participants would be able to run a node and manage their own blockchain network, which will give privacy and scalability, because the consensus algorithm used will be a different one. It will not be the proof of work. It could be Raft or IBFT for those who know, but it's more efficient and less energy consuming. On top of this blockchain layer, we've created a product called CoreStack, which is handling what we call the transaction orchestration. So it's a blockchain middleware that can take any business messages from the top of the application and translate them into blockchain readable language. And so each transaction that goes on the blockchain goes through CoreStack, its transaction orchestration layer. And CoreStack also provides a way to manage private keys that are stored on behalf of the investors. For those who have interacted with the blockchain, we all know that there is a huge user experience pain point in using private keys. So we've decided to offer a software vault that stores the investor's private keys for the issuer. The issuer will keep and store himself the private key that controls the smart contract of the assets. So we can store the investor's private key on our software. The user experience of the platform is very similar to Web 2. So the user authentication is done via login, password, and two-factor authentication, like you would do for your traditional bank account. And then there are several APIs, modules that sit on top of this infrastructure layer that enable you to have your investor sign a legal agreement, collect KYC and AML documents and store them in an encrypted database to probably reuse them if the investor wants to invest again in your fund, and probably tomorrow mutualize those documents between different participants who would want to share their KYC pain points. A module that enables you, and probably the most important of the stack, to model the security, define its characteristic, and issue it on the blockchain. We use a NERC 1400 smart contract that enable you to issue different asset classes or partitions to represent, for example, different voting rights in a special class of shares or carried interest in the private equity sector. And then the last module is the over-the-counter exchange module, which is basically an escrow smart contract that will collect the asset and the cash and perform the transfer of ownership of a security between two investors willing to exchange their assets. On top of that, there is the interface, but the solution is designed as a series of APIs. So you could use it with an interface that could be custom developed for you by consensus, or just use the solution as an API and design your own functional process on top of it. And then in terms of property management, we'll let Linda go through this.
When it comes to property management, you know, we've had conversations with a number of property managers, big time global property managers, and some of the issues that they are constantly faced with is how do they rationalize their property portfolio in such a way that as the global head of this company, I can, you know, I have a clear visibility of the assets under management. So how much how much of this property, the distribution of property in various regions, but also how do we manage rent payments? How do we streamline payments? Now, whether this is like rental yields coming in, if you're managing the property on behalf of other property owners. So if you're acting purely as a portfolio manager, for example, and you're collecting the rent, and then you're also helping to you know, pay the yields back to the asset owners. How do you do this on a global scale? At the same time, how do you maintain transparency of sharing best practices amongst your team globally, whilst using technology to drive down costs without creating silos? Because what typically tends to happen is we want to implement technology, and that's fantastic, but we implement technology in one region as an example, and that technology is not necessarily transferable to another region. Or we end up implementing different versions of technologies across the board, and it makes it hard for people to share information seamlessly and to collaborate. And so, again, going back to the notion of a distributed ledger, a decentralized ledger, a platform that allows, you know, teams to share transparently information, because at every point in time, so to speak, if there's like an update to the records, we are each maintaining the same version of that data. You know, the blockchain helps to streamline processes when it comes to sharing information. And so in that sense, it really helps to increase operational efficiencies and cost savings on the global scale, when you're talking about global scale now, or when you're talking about large property management projects. And also, the other thing is really, you think about the automation of rental collection, and also tenancy records. This is really important because on the blockchain, we didn't talk about KYC as an example, but there are also aspects of the blockchain where you could create, we have KYC solutions that have been built, right? And then you could potentially decide, and KYC means you know your customer, so it's just a form of identity check for customers. And so if you're a large-scale portfolio manager, like we said, and you have to maintain this constant list of tenancy records and also make sure they're constantly up to date, how do you know who is moving in and out of your property at every point in time? And so just helping to streamline that is a massive benefit to them. The other thing is really, you know, how do you, if the data gets updated, if for whatever reason data on a particular property gets updated, how do you communicate that effectively to the teams that need to know without sending endless emails? If you think about this, this is happening in the trade finance industry as an example, with one of the projects we highlighted called Congo. And in that particular, in the trade finance sector, for those of you who may be familiar, or in the international trade, what happens is you have lots of participants. So you have people you have the shippers, you have the financiers, you have the commodities producers. And so the end-to-end constant shipping of cargo from one continent to the next, it makes it, in the past, used to make it very, very difficult for people to communicate and to know the status of cargo at every point in time. And so the whole value proposition of Congo is, what if we begin to digitize this processes, starting with like a letter of credit, which basically helps me to know as a financier that the goods that, my theory is coming to me to collect financing for is actually authentic. How do you put that on the blockchain? How do you help the financer get on the platform? How do you help the trade supplier, the commodity supplier get on the platform? How do you enable the shippers to get on the platform so that everyone is sharing information visibly and we're able to communicate in a much more transparent manner? And so this is the kind of rationale as well that we're saying for portfolio management. You could literally begin to do this and to think about this in your own businesses of how blockchain can help you to become much more efficient from a process and operational point of view.
And then space as a service. This one is a more lighter one, but also quite interesting. So like me, that WeWork will not do his IPO, but space as a service is still a very hot topic, and we've seen many actors with different business models trying to provide space as a service. And when we talk about real estate, it's an interesting subject. The idea that we wanted to talk about here is that we will have many different co-working providers and co-living providers and urban garden providers. But how can we make a system that enables anyone to access them without relying on a central aggregator that will basically have so much power on this space provider that there will be asymmetry. And the idea that we have here is to so a small fraction of the solution, but the most important one, which would be the payment layer. And so by having each space as a service provider reference on the blockchain with identified addresses, we could build a system where they could create between each other bilateral agreements to incentivize someone who is subscribed at WeWork to join at a discount another co-working or co-living provider, and streamline the revenue sharing between those two actors without relying on a central intermediary. Because the payment will be done on a blockchain or on a layer 2 that sits on top of the blockchain, where the blockchain is used only for settlement or gross settlement at the end of the day. We enable every actor to audit instantly the position of each one and create new business models through bilateral agreements, offering users the possibility to access many different space as a service provider through programmable exclusive benefits, for example, by still trusting that the revenue being shared between each of those actors is accurate. And so this one is more early stage, but it's being thought of in Paris, for example. How could we enable anyone to access spaces without relying on a central intermediary is an interesting question. For energy, energy is it's a vast topic, but very important and key for real estate. I think we can divide the use case in 3 parts. The first one will be how can we streamline energy transaction? You probably know already the microgrids use cases where prosumer is able to sell the energy that he's producing to his neighbor, and because blockchain can be set up at a low cost, the energy, the financial transaction enabling someone to access the energy produced by a prosumer could be streamlined, could be done at a very low price. And this simple billing model could possibly be used also to enable a prosumer to give access to a plug that will be available to anyone who has an electric mobility or electric vehicles to recharge and its vehicles and benefit from green energy. So of course those could be created with a traditional payment system, but we believe that through microtransactions and through the development of those new payment systems that exist on the blockchain, it will be easier to interact with those new payments provider and incentivize people to offer the energy that they produce. Another use case, more in the property management side, is a use case that we are currently working on in France, is to answer the question, how can a property manager can prove that a building that is operating, but that is most of the case also owning, is energy efficient, because they, in a way, control the sensors that are giving this information, because they own the building, but they also want their clients or their users to trust them. And so here we are building a solution that takes all the energy data from the sensors of their building, and we anchor them in the blockchain. So there is no more a trust issue or a risk of conflict of interest between the owner, property manager of the building, and his tenant. And we believe that if this system would be generalized, it could be an interesting use case, because you could have an ID card of each of the buildings, understanding how much energy they consume, without relying on auditors, but by seeing actual data that you can trust because they have been anchored at the moment of their production. And the last part, which is very similar to the one on the asset management, will be for infrastructure financing. And so in Brooklyn, Consensus had worked on a project to enable people to be fractional owners of solar panels. It could seem a bit anecdotal, but also interesting to say that by reducing the cost of operating such systems and such financial exchanges, we could enable people to invest a very, very small amount in green infrastructure and receive revenues on the energy that is being produced by those infrastructure. And then we'll take some question. So we'll start from the bottom. So the first one will be, so Marcel is asking if we use our own developed blockchain for all the solutions, or do we use other private or public solutions? So on this one, we are working mainly on Ethereum, and for Ethereum there is the mainnet that you know, and then there are the possibility to create private chains. So it's really on a per use case and per client basis that we decide. For example, with Meta Capital, we decided to go on the public blockchain, and so we didn't develop any blockchain. But for projects like Congo, which are very large consortium, we provide them a solution to create their own blockchain, a consensus product that enable you to create a consortium by deploying nodes on different cloud providers. And so you can create a blockchain for pre-identify a limited number of actors who will have different rights according to your business use case. So we do both, and they both have advantages and trade-offs. There is a question on oracles. I don't remember specifically on which slide the oracle question was made.
So I think oracles was about the when we're talking about smart contracts, contract management, if I remember correctly, for managing in the construction process. Okay, so yeah, for this one, so again, the full decentralization is very difficult to achieve, and so you need to rely on some intermediaries that will give you the information. So I think that's what you are referring to with your oracles question. Technically, if you want to check out, we have a product called Rambus that is trying to solve the technical problem that exists today with the traditional oracles. But on the business functional side, I think it will really be to the people who want to implement the blockchain solution to identify who could be the oracles and how can we distribute their responsibility in the specific use case to make sure that the data is not tampered or we are receiving the right one. There are incentives schemes that can help incentivize the oracles to give a proper answer to a question. For example, in the airline industry, when you want to provide users with an insurance on their flight,
you could incentivize oracles to give a proper answer by slashing them if they are lying. So what if they need to raise money to fund capex at an asset for the codified chain? So I think the key element to understand is that even though those blockchains are different, they are interoperable, and we have the possibility to create bridges between private chains and the public one. And I think this question is interesting because it actually helps us to give our vision of what we see those consortia, how we see those consortium evolving with the public network. I think we will see many consortium created by each industries interoperate in the future, probably using the public chain as their internet. And so by creating bridges that enable you to bridge assets between the private chain and the public one, you can probably solve this multi-blockchain communication that you are referring to in your question.
Yeah. I can take the next three questions because they're related to the chart which I presented for the property financing, and yeah. So the chart numbers, that was when I was talking about 29% for loan financing. I mentioned it. I'm not sure when the questions came in, but like I mentioned, I was citing a specific case for the Ghanaian market based on some work that we had done there over the last couple of months. And so you're absolutely right. It's not reflective of the US market. But even though those numbers, 29% as an example, is not reflective, you could almost like play with numbers to talk about the benefits of crowd financing. And then to Emma's point, yes. So Emma, that was actually, it's not a zero yield, it's an 8% yield. But the idea of that chat was to say that the crowd investors have a share of equity of the platform. And so, yeah, just the number of 160 versus 430 was a representation of just the debt that was being paid back, the amount of debt that was being paid back. And so if you take into account equity as well, that goes less passed on to the crowd investors. That will go up to about 240, roughly around 240 for total repayment. Okay. So the next one is Olivier.
Yeah, so going for, so is it the question?
I don't know, maybe we need to read out the questions, right? So let me read out the questions just in case people don't know where we're at. So Olivia is asking, going from paper-based to digitized is a step for a lot of small developers. So to go from digitized to blockchainized, I like that word, is a massive, massive step. It requires new skills and capacity, don't you think? Is the regulatory framework in place?
Yes, so I think there are two questions. The first one is, yes, it's complex. It's R&D every day for the developers, but that's also very stimulating. So there is a massive steps, and our goal at Consensus is to provide solutions and products that enable anyone to interact very simply with this complex technology. And so most of our work is right on top of the blockchain network to build infrastructure product that abstract the blockchain complexity and enable a developer at a bank to interact with an API and only an API endpoint that will handle the blockchain work for him and send him back a message that he can use in his traditional application. And for the regulatory framework, it's moving. For example, in France, there is a new law that passed in December that enable non-listed companies and funds to use the blockchain as their one and only registry. And that's why the Mata Capital project was done. We don't need to replicate the registry from blockchain to a paper-based document, like it is done in most countries who don't have this regulation. We can now use the blockchain as the single source of truth. And so I think we are seeing that this regulation is being also pushed in Luxembourg. I think Germany has published a paper that is very avant-garde on how we could help businesses legally, with the legal insurance, interact with the blockchain. So Emma is asking why does the blockchain necessarily mean real-time data? So it does not necessarily mean real-time data, but when you have if we take a transaction, for example, when you have your securities registry on the blockchain and you have the cash on the blockchain, you don't need to reconcile position. As soon as the transfer is done, it's visible by anyone who has access to this blockchain. And so you can have what we call real-time cap table or real-time registries, because you don't need anymore to reconcile position between separate databases that are owned by different financial intermediaries. So if you are lacking a piece of data that is not represented on the blockchain, then you will need to have an oracle or you will need to do some reconciliation. But we think that for traditional securities transaction, having both legs of the transaction on the same registry would help accessing real-time data. For the risk management and auditing of those SPV and of their oracles, so again, we will need to decide how to better design the solution. I think that too often in the blockchain space, we hear that all parties will be disrupted. I think it will be different for the securitization example. The parties that are responsible for a certain task in this life cycle will stay, but their processes will be blockchainized, and so will be made faster and probably less risky if they interoperate with the blockchain. So the auditing, if it's a business question, will still be done on the same participants. If it's a technical question, there will be a need to translate this blockchain information into a human readable format or to integrate with existing solution.
I just want to say, in terms of time, so we have like a minute to go. What we plan to do, we have about 9 more questions left. So maybe we'll just answer the final question. And what we'll definitely do, to save everyone's time, is we're going to reply back to you directly or reply to the group. We're going to reply back to you based on the questions you've asked to make sure we're addressing every single question. But we're just conscious of people's time, and for etiquette reasons, we want to make sure that we don't overrun. So Matthew, do you want to answer the last question? I mean, I could answer the last question. Olivia is asking, it was driven by lack of overlook of CDOs. So basically, this is not like a collateralized debt, right? So what we're saying is, if you're making an investment, you have a clear understanding of the asset that you're investing in, and so it's much more transparent for you in that sense as an investor. Is there anything else you want to add to that one, Matthew?
No, I think this one was not a question, but we can take another one. I agree. I will take one question. So the blockchain network for the private chain, the codified chain, is Pantheon. You're well informed, but now Pantheon is called Hyperledger Besu because Pantheon just joined the Hyperledger Foundation, and we are very happy about that. So yeah, it's using Hyperledger Besu. Yes. And then for the next question, we will reply you one-on-one, and happy to continue the conversation with each of you.
So again, thank you so much for for taking time to be with us at this webinar. We welcome your feedback. You can get directly in touch with myself and Matthew. You can connect with us on LinkedIn, or you could send us an email directly if you have follow-up questions. What we will do is we'll send like a follow-up email to thank you with our contact details. So yes, it's been a pleasure to have this with you. So thank you. Any final?
Thank you very much.
All right. Thank you, everyone. Take care.